Today we've got Kathy Huynh with the Billyard Insurance Group, and she is an insurance expert, a franchisee owner of Big Insurance, and she's so graciously come on the show today to help us with all things residential insurance. Thank you so much, and welcome to the show, Kathy.
Hey, thanks for having me. So I appreciate the opportunity to be here and share my craft.
You betcha. So we'll get into Big Insurance a little bit, and you guys in your space, you and Ronnie are the owners of your franchise. But before we do that, why don't we just get right into what's happening in Calgary? Like, what are you seeing as an insurance franchise owner and insurance rep? What are you seeing in Calgary in terms of insurance rates for residential homes?
So I think it's no big secret. It's been a hot topic, I think, year after year, where we're seeing that rates are increasing quite a bit. That's
Yes.
a general trend for sure.
Mm-hmm. So why? I mean, I've heard people, I see them on social posts, or I talk to people and they're like, you know, my rates went up. I didn't have an accident. I didn't have any claims. So why are rates trending up?
When we look at the industry as a whole, what they tend to look towards is losses that they can predict in a certain area. And what Calgary, unfortunately, is known for is hailstorms. So we factor that in, and insurance carriers are a business at the end of the day. If there's a huge storm that hits the Calgary area, one example in particular would be August of 2024. We had that massive hailstorm. It greatly affects their bottom line. And so in planning for the years to come, what they'll do is come up with a lot of different rate modeling and predicting which areas will be most impacting. And then they'll raise the rates kind of like accordingly in anticipation of that.
It's a business. That makes sense. They're designed to make money. Kind of like going to the casino. They're in the business of making money.
Yes.
If everybody won, then they wouldn't be in business. So obviously they need to take in more than they're paying out. So that would be a catastrophic loss of, or what would you call an event like that where you have hail that's damaged hundreds or thousands of properties?
So yeah, definitely we call that in the industry a cat loss. Alberta.
Cat loss, that's cool.
Yeah, cat loss. And so
we're in the know.
Yeah, this is a cool term to know. And one of the reasons why, you know, Calgary's kind of lumped into this sum of this is a terrible place for insurance companies to be in is that we own two of the biggest cat losses in Canadian history. And that all happened in the last 10 years for us.
Okay. So what about are you referring to the flood or are you talking about another hail event?
I'm talking about the fires in Jasper. So
the
things
fire.
like,
oh, wow. Okay.
Yeah, something like it still happened in this province. Well, the insurance carriers, they insure all over this province. And then from a profitability standpoint, if we're hanging on to multi-billion-dollar losses, not just hundreds of millions, multi-billion-dollar losses, they really step back and kind of reevaluate their position where some of them have decided we don't want to be here. They just close up shop and then they sell their books of business, or they give the clients kind of like a warning that, hey, come your renewal, we need to get you somewhere else, pretty much.
Oh, wow. I jump around a bit here, but I'm just curious, like, who are some insurers that have left Alberta?
So most recently, there's been a big acquisition between Economical Insurance, also known as Definity Insurance. That's the name they're transitioning to. They bought Travelers Insurance, which was a pretty well-known, it's a worldwide company. Travelers just decided it's just not kind of worth doing business here, and that acquisition was done. There have been other insurance carriers like Sonnet Insurance, for example. I believe they've left the province completely. Aviva, that's another big name that is kind of just shrinking the ways they do business and making it less accessible to clients. So a lot of times the ones that choose not to leave make it incredibly, I don't want to say difficult, but that is the truth, is it becomes harder to find competitive rates among the ones that have remained.
I've heard of one. Are you okay if we mention, like in terms of what you just said, a company name? Because I've heard of a lot of people where they're like, I'm with this company and the rates were always so good, and then now they're jacked up, like they're almost double.
Yeah, so I think
there's like one particular insurer.
There's one particular one that I'll say it because I don't sell it, but otherwise I would mention the other ones too. TD Insurance is a big one.
That's the one I was thinking.
Is that the one?
Yeah,
okay.
TD, yeah.
They've owned a huge part of the market share, and it's no secret because they're so accessible to so many of us. You can buy them via phone, you can buy them via internet. Their rates have always been relatively stable. But at some point, when that carrier picks up too much of that market share, so let's say Calgary, for example, they are insuring way too many houses in Calgary.
Yeah.
Then a hailstorm comes through like 2024, everybody and their mom puts in a claim. So what happens is, again, it goes back to that profitability standpoint. They're looking at paying out so much that they really have to reevaluate their position. If another storm were to come through in, a close frequency, then you're looking at a not so profitable position. Maybe they would even pull out. So to kind of hedge their bets against something like that happening, what they'll do is they may raise rates.
That's like the "it's not you, it's me" of the
Yeah,
insurance
it's a
industry.
very passive breakup. So like slowly just breaking it off with you little by little, year after year. And then at one point, it begins to become one of those things that you really didn't pay attention to, but holy cow, one day you looked at your bank statement and now you're like $200 over what you used to pay monthly.
You're like, John, it's time to call Kathy and Ronnie at Big to get a
Right?
quote.
Yeah, that's when you call us, and then we try to work through that problem for you and get that money back. But what that's designed to do is that the consumer will take on so much until they reach their threshold, and they'll start to shop, which then inadvertently is going to correct some of their overexposure in Calgary.
Right. Okay, that makes sense. Raise the rates, and it's like, okay, it makes sense at this rate, but then it's inconvenient to change your insurance.
Totally.
So they'll tolerate up to a threshold, and then all of a sudden they're like, we got to call. Like, it's not worth paying this anymore.
Like a bad relationship.
It's like, it's time. Time to look for someone new.
Yeah, totally.
Yeah. Okay. Cool. Well, you were mentioning these cat losses, and it made me think of what about, like, you've got vinyl siding on a lot of these neighborhoods. What if someone were to, say, replace and get hardy board or some other, like, stucco or some kind of class 4 shingles or stuff like that would be a little bit more resistant to hail? What would that affect a rate in a neighborhood?
I say on the individual basis, it doesn't really help other than you're just going to have a house that's going to withstand this weather better. Most insurance carriers are going to just generically assign maybe like a 20-year lifespan on roofing or a 30-year lifespan. So it doesn't matter if you spring for the more expensive shingles. Unfortunately, I don't think that the carriers have really drilled down to that point yet where they can reflect that in your individual pricing. There's kind of just a blanket algorithm that happens behind the scenes.
Okay. So that's interesting then. So it's kind of like 20-year roof, it is what it is.
It is what it is. So what that will do is, like, if you told your insurance broker, I have hardy board or I have stucco versus vinyl siding, your replacement cost is going to increase because it's going to cost more for them to replace those items later on. So you'll see, instead of like a $900,000 house with vinyl siding, you replace the siding, you might have like a $925,000 replacement cost based on that. But as far as in the rating, will your house be cheaper because of it? In my experience, I haven't seen that.
Okay. So not really a difference in your rates?
No.
By doing that?
And this is coming from 20 years in the industry. I've sold for many different outfits. I haven't seen that side of it.
Okay. And you were down in the States selling. You had an Allstate franchise, I think, down in the States, didn't you?
In Texas.
In Texas. Oh, that's cool. And then you came up here. Okay, we'll have to get back to that. But the roof. So if a roof, let's say there's a roof claim. I remember back in the day, like a number of years ago, if the hail came through and the roof was damaged, it was replaced. It didn't matter if it was 15 years old or 20 years old or 2 years old, like, it was replaced. But I think now it's like a depreciated version of like, let's say your roof is 20 years and it's 10 years into it, and they only cover half of the roof, or how does that generally work with your insurers?
So most companies are, and I would say probably 99.9% are working on a depreciated payment scale. So it just doesn't make sense if you ignore, like, let's say, and I don't want to, the term ignore is not a good one either. It could be just by default, you just bought this house, it has a 20-year-old roof on it, inspector says it looks fantastic, but you have a loss. They would go in and price it out based on that depreciated scale. And in a way, we can kind of see the logic in that too, right? Like,
It makes more sense.
totally. I wouldn't
right?
buy you a new roof and give you 100% of its value. We would share some of that burden between each other.
If you had curling shingles and then hail comes through,
yeah.
to get a new roof would be almost like you're gaming the system, right?
Totally, yeah.
So I think it makes more sense the way they do it now. Okay, so just to be clear, Kathy is an insurance broker. So it's similar to like a mortgage broker, right? Like if you go to a bank here, from a lender perspective, you go to RBC, you're going to deal with RBC. If you go to, say, Allstate, you're going to deal with Allstate as an insurance provider. Whereas Kathy if you talk to her or you talk to Ronnie, they can ask you questions about your home and aspects of your life and how that would affect your insurance. And then they can package your file and put it with a certain insurer.
Right.
So I guess it would depend on the roof depreciation, insurer to insurer, what their own policies would look like.
Totally.
There's a few things that are a few hot topics in the real estate industry, like with realtors, and we see on the chat groups and everything, like stuff that's coming up. One of them right now, that's a pretty hot topic, is poly B piping.
Yeah.
So what does that look like? Like there's a lot of misconceptions. Some people are like, you can't even get insurance on poly B. And then a lot of people are quoting to have it removed. But what does that look like from your perspective? Are you able to cover poly B?
We can. I think poly B has become like a dirty word in the insurance world. It's just one of those like, oh my God, it's the devil kind of. So I recently ran into this. My father-in-law had poly B. His house was built in the 90s. Not a single drop of water has been spilled because of this poly B. He maintenances it, all of it. But he got a breakup letter from TD actually on his renewal.
Oh.
So typically, like when we see that, the insurance carriers will give you a certain time frame to try to fix whatever is going on or they deem as the issue. TD straight up was letting them know, if you don't get this replaced by X date, that we would just cancel you. So he calls me in a panic. Is there anything you can do? So thankfully, I have in my bag of tricks lots of different carriers. We say there's a type for everyone out there. Same with the insurance world. There's a type for any insurance carrier. We were able to get him some different options, and they weren't non-standard options. So that's a term. When we say non-standard, it means it doesn't fit in the well-known companies that you know, like the Intex, the Avivas. It might be, to you, a totally foreign-sounding insurance company. You've never heard of it before, but it will insure that risk still at the end of the day. But thankfully, we didn't have to go that route. We were able to put him with a carrier that was okay with it, so long as he had water alarms and sensors put in. They are monitored through his home security system. So with those remedies, they made an exception. So it can be done, folks. It's not a, nope, can't find it, steer clear of that house. Just we have to do our homework and make sure that it is something, because if you do have your heart set on a house with poly B, the premiums are going to be slightly higher. Your choices will be limited, but it's not the end of the world.
With the mitigation, so it's not the end of the world. With the mitigation systems, was that just like that particular insurer, like some of the non-standard, would they just take it kind of like as is, do nothing?
Yes.
Maybe pay a bit more, but you don't have to do any action
There
whatsoever.
is, yeah. So like the term is like different strokes for different folks. Same with the insurance world. There's so many different companies out there willing to entertain, risk profile that you can still find it. But the truth is, when you go into that secondary tier, you are not getting the same level of, you will be sacrificing. So from that perspective, you might want to kind of explore the other options before doing that.
Look at maybe having it replaced or putting the mitigation options.
Totally.
I heard, and I don't know if this is true, I'm not a plumber, but I heard that it was poly B that was exposed to sunlight. So if, for example, they're building a house, they leave the roll out in the sun on a Friday over the weekend and install it on a Monday, then that would weaken it over time. And so there's no way to know that, right?
There's no way to know. And then I myself am not a plumber. I've been
Nor
told
do I play
something
one on TV.
I do not want to be one either. Ever. But what I was told was
nothing
it's
against
mostly,
plumbers out there, but
yeah, you guys do a great job.
Yeah.
Fantastic.
Keep it up. Keep the water coming.
Yeah, it's the joints. What I was told on the insurance side was claims adjusters are seeing where the joints fail. So it could be from warping over time.
Oh, interesting.
And then, and it doesn't necessarily have to be exposed, is what I was told. plumbers, feel free to message us and tell us we're wrong.
Yeah, or drop a comment down below.
Totally. It's just one of those things where I was told, like, let's say most of our things are in the basement, or maybe they were built in places or times when insulation was not so great. So sometimes you've seen interior pipe freeze, right? Like turn on the tap, nothing comes through. So they were telling me that because of that constant expansion and freezing and stuff, and when it warms up, it then warps again, that it weakens at the joint where it's connected and causes leaks. This is what I was told.
Right. Okay. But I guess at the end of the day, it really doesn't matter why it's failing or if one house isn't.
Yeah.
If it's poly B, it's basically painted with the same brush.
It is.
And then, but you do have insurers that will cover it, some with mitigation and some with lesser coverage, but will just cover it straight up. You don't have to do anything with it. We also had, and you still see it from time to time, I think it's more homes in the 70s. There was some issue with copper. So they went to aluminum, which is, my understanding, is a more expensive metal. But there was aluminum wiring in some houses. And then they realized it would spark and it was a fire hazard.
Yeah.
So what about the same question in relation to poly B, but with aluminum wiring? What does that look like from your perspective in trying to find coverage for someone with that?
Right. So there's some insurance carriers, they treat it much in the same type of logic. We'll look at the whole story. So some carriers may accept it if it's been checked out, if an electrician has signed off on it and fixed whatever needed to be fixed to make sure it mitigates a possible fire risk. That's not like the one-size-fits-all solution for these insurance carriers. There may be some that just don't entertain it at all. So again, it goes back to, if we can't find it here in this bucket, which our first choice will always be to go with the ones that are more well-known, then we'll go into the second tier. And they may have some sort of stipulation when they do insure it. They probably still want to get an electrician to check it out and sign off, for sure.
That's been my experience from what I've heard. I haven't sold a lot. I can't think of one in recent years, but that I've heard that they come in and they call it pigtailing. Maybe that's wrong term. I don't know, whatever. The electrician looks at it, and then I think they're able to connect with a junction box or something so that it's copper that's actually
I've seen
on
that.
the switches and on the power receptacles so that there's not that sparking risk. But it sounds like you got to have an electrician look at it for the most part.
It can't be your Uncle Bob. It has to be like a sealed electrician.
Someone signing off, putting their trade on the
their name on the line.
On the
pretty
line,
much.
yeah, fair enough. I just thought of this. This is back like further in time. This would be historic homes. My understanding was knob and tube. Like it's very rare nowadays.
Yeah.
But like no coverage at all. Like, will anybody cover a knob and tube or?
I haven't seen that come across my desk in the last probably 5 years.
It's quite rare.
Yeah.
And we don't have a lot of those homes of that era here in Calgary.
Right, and a lot of them have just opted to change it if it ever was.
Take it all out. Yeah, I think that might have been a fire hazard too. Yeah. I think that is good for kind of risks in terms of coverage there. Now, why don't we talk about your brokerage a little bit? We jumped into it. I just wanted to get right into the info because, people on social media, they'll just scroll if we don't get into it. But so you have been in the real estate. I'm in real estate. You're in insurance. You've been in the insurance industry for about 20 years?
About 20 years.
Did you start when you were 12?
Don't let this baby face fool you. No, I started when I was in college, actually.
Okay.
20? Yeah, I was 20 then.
Okay. So, I mean, you must have seen a lot of changes over the years and learned a lot over the years as well.
Yeah. So the industry, for as long as I can remember, has always been like, oh my gosh, when is the next big weather event happening? And as technology gets smarter and it can predict things better, insurance is not just me on the front line. There's also, don't think people know this, we employ like a huge number of actuaries, number crunchers that kind of crunch all these different models to figure out likelihoods that things are going to happen and what exposures insurance companies are in for. So again, we're seeing it real time with what's happening in Alberta, kind of experienced it in Texas with our vulnerability to wind and hail and hurricanes mostly. The Gulf is just a mixed bag of fun. What happened there is slowly happening here, but on a different scale, more so because of the hail and the fires. Those, I would say, are our two biggest vulnerabilities here in Alberta.
Hail and fire. Okay. And we did have that flood 2013 or 2014?
2013, I think.
2013, summer of 2013. And then, so you've been in the business for quite a long time. Ronnie is your business partner, and he's been in the business quite a while as well.
Yeah.
And you guys right now are on Kensington Road, I think, but you bought a space now. You're going to be moving a little further north.
Yeah, we'll be near the Costco, because if I mention anything else, you guys won't know where it is. But the Beacon Hill Costco.
Beacon Hill
there.
Costco. Okay, in that general vicinity. And then you've got, so it's you, Ronnie, but you've got a plethora of staff as well.
Yeah.
Like how many different, like what is your staff count, or are they all the same role, or what does everybody do there at your brokerage?
I think what we've toyed around with was a couple of different models, but ultimately what we landed on is we felt we needed a dedicated service team. That would be their one function would be to take care of, service requests, payments, things like that. And then we have a team of brokers that they usually are a mix of hybrid brokers. They'll come in and out of the office. But that way, if we separate the two, then the customer at the end of the day gets taken care of the best.
Okay, so you've got a service department. Are they in-house service
They're
department?
in-house.
Okay.
Yeah.
Oh, cool.
It's just a cooler environment, I think. When you come in and you see faces, and then if clients want to knock on our door and come get answers, they can. It's the same people day in, day out, so you're not calling like a call center or anything like that. But the energy is better when people are in an office. At least that's my experience with it.
Yeah, that makes sense.
Yeah.
And it's the continuity too, right? Like you
Right.
dial this for that number and this, and then you're waiting on hold for hours.
Yeah.
And it's like, no, if you can pick up the phone and get somebody on the phone.
Yeah,
that
like
makes
those
a huge
automated
difference.
triggers.
I always push
hate
I
those.
just push 0, but then sometimes they change it, and then you don't know which one is like, is it 3 or is it 4? Is it?
I don't know.
Just hit
I think
0.
I speak clearly, but apparently they don't think I speak clearly. So
So, okay, so you've got quite a sizable team there, and the service, I guess, would be handy in-house service, and you're in the Northwest, but realistically, you can write insurance all over Alberta, can't you?
yeah, like all over Alberta, we find these days people are very short on time too. So when it comes to insurance, it's one of those things where they can sign it over email, or if they want to talk to us just to solidify things, it's easier than doing a face-to-face thing. There are people that still prefer that, which we're happy to sit down and get to know. I think the coolest thing is that local presence is like, we do know our customers. I know it sounds corny, but I do know what's going on if they call and
You live in the area.
yeah, like sometimes we'll run into them, or, if they call, we ask about the kids. It's just one of those things that at the end of the day, it is that relationship. We know you guys can go anywhere. You can buy insurance within 10 minutes online, but that whole personal touch thing is what we really do well.
That sounds great. Now, we were talking before the cameras started rolling here about real estate transactions and then about insurance and how that generally plays out. And I think you're right in that regard. Like you were saying, a lot of times people buy the property, and then now it's one of those last items on the checklist is like, okay, let's get insurance. But you were saying it wouldn't be a bad idea to start that conversation with your insurance rep earlier on in the process so that you could either get a quote before someone puts in an offer, and then, sometimes the market's moving pretty quick. So I
Right.
said a good compromise would be either before they put in the offer or in the period where they have conditions. So it's like you can look, what would the coverage be for this property to at least be able to run your numbers.
For sure. I can think of 2 deals probably this year where it was riding on whether or not the insurance could happen, and like down to the wire. They're on the way to the lawyer's office. Hey, we're having trouble. I was probably the 10th person that client called, and they were told no, like before that. One in particular was a house that was, I think it was like a lake house. And the issue with it was the fire rating on that house. There was not a fire department that could respond to it within an allotted amount of time. And for that reason, they were told no, that there were no insurance carriers. So their current carrier declined them. Everybody else did. And so we start working at it. Where we were able to get that deal was I got to know the people at that town very well. I called around asking for the fire department, and we were told, you know what, that map hasn't been updated yet. There's actually a fire station that's like a little bit closer. And so we were able to get that one in. But that's not
Oh, wow.
a situation you want to be in, right? Like,
No,
holy
if
cow.
you're a firm sale
Yeah.
and you're committed, it's got to happen.
It's got to happen.
That's
and
something
you
you
get
definitely
penalized.
would
It
like
gets
to-
expensive, right?
Well, you could get A, lose your deposit, and
Okay.
B, get sued.
Yeah.
If the seller has losses, right? So you put down 10, 15, 20 grand. Even if you put down 5, you could lose that and then also open yourself up for getting sued, and you don't necessarily get the property either, right? So it
Right.
could be a miserable experience.
Yeah. And that was the big thing. It was like, okay, so that was close. And then recently there was another situation kind of similar. It's just one of those things where it couldn't fit in any standard place. It had to go to a special market that was okay with it. And we were able to find it. But again, it happened in the 11th hour for that.
I haven't personally heard of a lot of that stuff, but I think you've got different types of people too, right? Like some people that are like, I'm just going to roll the dice. I don't care.
Yeah.
But if you've got pretty standard home in a standard area, maybe less risk. But if
Less
you've got a
risk.
really unique property,
Right.
that would probably be the more critical time to, hey, let's
Yeah.
look into the insurance options before we put in this offer or before we remove our conditions on this offer.
Yeah, totally. Like there would be a few situations you want to explore first. It would be like your remote types of properties where, we are concerned about if there's a fire, can anybody put it out within a reasonable time frame? Second situation would be it's an extremely old house and there might be issues with it. Other than that, or if your intention is for investment, and you want to do Airbnb or you're planning on souping up this house and you needed a special type of insurance, not just like a regular home insurance. And now it's going to cost $7,000 instead of $2,000 a year.
So the usage as well depends. So you guys can cover Airbnbs?
Yes.
Okay. What about construction loans, or I guess the process of construction and insurance?
Yeah,
coverage
so
for
we
that?
do a lot of that as well. So there's homes that are vacant and they'll remain vacant while the renovations are going on. Big misconception is, no, I plan on living in it, so I'm going to insure this just as if it's like a regular primary house for myself. Well, the only time you're going to find out that that's a no-no is if you ever have a claim situation arise.
Something big happens,
Right.
and then it's like,
Yeah, in one of my situations, the client just didn't tell his existing carrier, and what happened was people broke in and were squatting in it, and they started a fire.
oh,
Yeah, and so comes back to the insurer. The insurer then was like, well, at what point were we told that it was vacant? And that can result in claim denial because it's a misrepresentation of your use.
okay, so definitely key to
Yeah, you
to
want to
let your
tell
insurer
us.
know. Better to err on the side of caution than risk,
Totally.
because otherwise you could potentially
You-
not get covered.
Right.
Vacant property, that's a good point, because sometimes properties are listed for sale, the owner has moved out, they're not in there anymore. How does that work? Like what insurers do you
So-
have that will cover that?
A lot of times your main insurance carrier, the one that you were already with, will insure it for a certain number of days. Once it goes past that, then you might have to switch the type of insurance that it is. But the key is always let them know and they'll tell you.
So a non-standard market maybe after X number of days, if
Right.
your insurer's like,
Yeah.
okay, you're gone, you're selling the house, it's going to sell, but if it exceeds this amount of time, then you might have to
Yeah.
place it with someone else.
Yep. Some carriers have a vacancy clause in which they know for a short temporary period of time, could be 30 days, could be 60 days, that it will be vacant. And then they want you, so just because you told them one time and 60 days expires, doesn't mean we're absolved of
You're
that
not off the hook.
responsibility.
You have to
Right.
You have to be after the
You
your
have to
insurance
tell
company.
us.
Okay.
Yeah.
You mentioned rates coming up. That's what I've heard in the industry as well. I know that bundling with an auto policy sometimes will get a better deal, like a bundle discount. Are there any other things that people can do or they can bundle in order to get their rates to be a little bit lower?
Yeah, so what people can do, bundling used to be the ultimate answer and the end-all be-all. What we've been seeing is it hasn't always made sense anymore. So where one carrier is really great on the house, they're totally missing on the auto insurance. So the thing is, like with brokers, what we can do is we can look at it from two different angles. Is it their net savings-wise if we put it together, or if we break it apart and put it through different carriers, does that make more sense for you? Things that are newer also help. So if you have a newer roof versus like an older roof, that could help. Having those alarms, alarm system security in general, where it's monitored, will lower your rate, but also those water alarms that we talked about.
Right.
So that's a biggie. I would say the most common claim that we have on house insurance would be water losses and hail.
So water within the home, their pipes
Yep.
burst or something?
Pipes burst, sewer backup's a big one.
Okay.
Things like that can go wrong with.
So bundling used to be the be all end all, but now it's like
Now-
unbundling might be the answer.
It
then.
might be, and it's just one of those things. A big clue is if you've been with your carrier for more than, let's say, 5 years, I think you would be well served to review your rates, just to make sure what you're getting is fair, because that whole side of the industry is in the background where there's incremental that makes sense, where the rates are going up because inflation totally makes sense, right? But if you're seeing like a 20% jump or something that's out of the ordinary, bells should be going off and letting you know, whoa, like might be that this carrier is not really interested in staying in this area right now. Let me shop it to see.
Yeah, so that would be a sign then a significant jump is maybe the insurer doesn't actually want to be there. They're trying to politely tell you that it's time to go. And then, so to get a quote, they call up brokerage, they call up Ronnie, or they call you. I guess you could route them to whoever you think they should speak.
Yeah.
But what would that timeline-wise generally, I mean, obviously someone's got a million houses and cars and everything is
Right.
going to take a long time, but the average home and family, what would that
Yeah.
look like time-wise to get a quote from you?
I think it'd be ideal if you called us within like 45 days of your renewal. Because if we do it any sooner, you would be breaking a contract, possibly incurring penalties with the existing carrier. And then we can't, and if you did like the rate, and let's say you were going to move on the renewal, we can't hold it past a certain number of days either. So within 45 days is safe.
Okay, so that's your time
That's
where
a sweet spot.
Sweet spot where you want to get the quote. Now, let's say they're on their lunch break and they've got 20 minutes and they're
Yeah.
like, hey, Kathy, can you help me out? Are you going to be like, yeah, I got you? Or like, no, you got to call me back when you've got.
Oh no, we're pretty quick. So I think we pride ourselves. Like Ronnie is insanely fast with quoting.
Ronnie's quick too, yeah.
Yeah, he can do it from start to finish and get you to sign probably within 5 minutes and get it going. But like, we just need a few basic things. So if you're thinking, I don't want to move because I think it's like this huge mountain of a task, we don't need that much. Like literally, it could be like a 30-second phone call and we could get enough to get the quote going. The rest we can just refine later.
Okay, so if it's like ballpark, this is sounding good,
Yep.
we'll go through a secondary batch of questions.
Yeah,
and go
absolutely.
from
Like
there.
we can go back and compare the details. So a lot of it, if I have an address, I can pull up a lot of things that were public data. So it can tell me the year built, the square footage of the house. And then once we get that quote, we can just email it over to you and you can just kind of look at what we based it off of and then let us know where we were wrong on our side.
Gotcha. From my experience, I've seen with residential homes and insurance policies, a lot of times we're being asked for the age of the furnace, the age of the hot water tank, the age of the roof. Is there anything people should be watching out for if they're a buyer and they're looking at homes? I guess Poly B obviously
Poly
is
B.
one of them, right?
Yeah. So I guess like, do you mean in the sense of like should be avoiding?
Or just being aware like this furnace is from the 70s. I don't know how it's still running. Is the insurance going to say like that's not going to be, or it is going to be
Yeah.
an issue, or at least to know like if they're looking at this and that's old, they need to budget for a new furnace or a new water tank, or
Yeah.
the roof is like at its end of life. So make sure when you're buying, you're getting a proper pricing on that to
Right.
reflect what you're actually getting into.
Yeah, I would definitely look at those 4 items, roof, furnace, hot water heater, those things, even if you don't go to the point of getting an inspection and you're just doing your walk, just walking through this house just to view it, you can see manufacturing dates on hot water tanks. There's usually a sticker.
Yeah, they got that sticker on there. And you
Yeah,
can
by
see
the
date.
furnace, there's usually some sort of like a maintenance record or a maintenance sticker that's on there as well. So that can kind of give you a good clue, how old is this thing? So I don't think it necessarily would be a deterrent, but maybe just an FYI if you're negotiating. But Jesse would catch that, right? You would
Got it right here.
Yeah, so Jesse would catch that. But that would be something like what he said to budget with your I guess, home emergency fund budget, right?
Okay, yeah.
Yep.
In terms of keeping it, it's almost like a reserve fund
Yeah.
for a condominium, but a reserve fund for your home.
Right, but
operating
it's
your
not a
home.
non-negotiable for the insurance carriers based on its ages. You might just have a super depreciated roof rating, but the house pricing for the insurance would reflect that those items are older.
You mentioned that hail and fire, and I guess water being the kind of higher end risks. What about, like, you don't see a lot of wood burning fireplaces in properties. What is the insurance view on wood burning fireplaces?
So wood burning fireplaces are okay. They want some sort of like inspection done on them,
Okay, that would probably be a wet.
the wet
like
inspections.
wood energy technology transfer, WETT,
Yeah.
wet inspection.
So wood burning fireplace is okay as long as it's not the primary source of heat in your home.
Okay, you gotta have a furnace or a boiler
Yeah.
or something else.
Something else. And still, you would want to have those inspections done and just make sure it's maintenance well. It's the wood burning stoves that were in the older houses that are the big red flags. Because they used to be the primary source too, right?
Yeah, we used to, in my family, we had an old farm and it had one of those old stoves and you just set a fire within the stove.
Yeah,
I guess
yeah.
that could burn your house down
Oh, totally.
pretty easily.
And even those are not deal breakers. They just have to be properly like inspected and certified.
So it's better to just be like, this is me, this is my
I got it.
property, and
Yes.
just come clean, and then that way, if anything happens, then there's no like possibility of claim denial or a
Oh,
very
totally.
minute
I think
risk
it should
of
be
that.
like a full disclosure because they want to know what they're getting into. And you also want the policy to pay out at the end of the day.
If
Yeah.
something happens, you want to make sure you're covered. It sounds fair. I mean, it makes
is.
sense.
Yeah.
Was there any other topic or anything else that you think that viewers should know about or you'd like to say before we wrap things up here?
Any other topic?
I'll check my secret
You're
sticky note on my coffee cup here. No, I think we got everything. Oh, rate by postal code.
Oh, okay. Yeah, that's a big one. Kind of back to what we talked about with these losses in Calgary. There are some areas, if you're intending on buying, that will rate higher on home insurance as well as auto insurance than others. Notoriously, it's kind of been based on quadrant.
Where are the highest rates in the city?
Yeah, right
Tell
now,
us.
I would say southeast, northeast used to be well known for hail. And it's
They-
totally because of
every
hail frequency.
So often, yeah, you're getting
Yeah.
getting a lot of
I think,
hail coming through there.
They got hit in 2016, 2020, 2024 now. So that's like 3 in the last, little bit here, the span of 10 years. So obviously the insurance carriers are going to feel very strongly about that. So the ones that remain are going to put into place some stipulations that either will make it a little bit better for them because they can't, I guess, flat out deny a person the insurance. Deductibles I've been seeing have been higher for wind and hail in these areas.
Okay.
So instead of like a $1,000 or $2,500 deductible, which is pretty popular these days, we'll be seeing more like $5,000. I've seen $10,000. So what that means is if you have a hail loss, you are responsible for the first $10,000 before insurance will foot the bill.
Which at the cost of the average roof, that could be the
It's like
tipping point where you're
half.
like, I'm just gonna
do it myself.
Yeah. I guess in terms residential real estate and insurance, it might be a good idea to loop your insurance rep in early on in the process.
Right.
And I know everybody is busy and nobody has time for anything. So it's like, are you going to do it? Maybe not, probably not. But if you have an odd home or you're in a location where you might have a
Right.
higher risk, ideally, perfect world, you should loop in your insurance rep early no matter what. But if you have a bit of an oddball property, then that might be even like a red flag to be like, hey,
Right.
call now. If you're looking at it, cabins or acreages or something like that,
Yeah.
some kind of a weird thing, historic heritage homes or something like that, then
Yep.
maybe like a 60 amp panel or something like that, you want to start
60's a
getting
no-no.
that. 60's a
60
no-no,
no-
eh?
yeah,
Is it
totally.
full stop?
These days, I would say they're declining those quite a bit because like minimum standard would be 100, and if you've got a legal suite, got to be 200, right?
Yeah,
So-
it's not like 1930 anymore where you don't have hair dryers and cell phone chargers and whatnot back then,
I
right? So they're
know.
just like one plug in a room or something, that was enough. Now
Oh,
it's like
yeah.
you need like, how many plugs do you need in a room nowadays? You need a lot.
I don't know, but the other day I was making coffee in my office,
Yeah.
and they were running heaters in the office next door, and it just blew the circuit.
Pop the
It
breaker.
tripped the breaker, yeah.
Oh, wow. So I think energy usage that's another topic of discussion, but
Yes.
energy usage is going up with everything just being electronic. Well, thank you so much for taking the time, Kathy, to come on the podcast. I think this is episode 6 of the podcast. And again, we've got Kathy Huynh with the Billyard Insurance Group at Big Insurance. It's been a lot of fun and it's been informative. So great. We're winning on 2 fronts there.
Yeah, definitely. Thanks for having me.
All right. See you later.